But let's welcome on board Sacchitanand Uttekar from Tradebulls for a check on the market on the technical front. Sacchitanand, good morning and thanks for giving us your time. 25,100, important level. Today is Nifty, weekly expiry as well. What are you keeping an eye out on in terms of the Nifty as well as the Bank Nifty?
Good morning, Vinny. Good morning, Nigel. And during this week, we were of the opinion that the Nifty could scale towards 25,160 levels and probably could extend the rally towards 25,400 during this particular August series itself. If you look at the overall development on the price, there has been a very confident crossover of its 5 and 20 exponential moving averages. In fact, if you look at the base itself, we have seen some confident put writing at around 25,000 levels itself. So I think the base has now shifted from 24,800 towards 25,000. And that's why we believe that even at this particular juncture, one can still aggressively position oneself on the long side. Keeping an eye on the target of around 25,400, we are recommending building fresh long positions. One can keep a stop loss at 24,980 on closing basis. The significant development has been from the Nifty Bank. If you look at the last 3 trading sessions, the range was contracting. But if you look at the daily RSI, the daily RSI was improving. So this was a good sign that this particular index may eventually witness a breakout. So I think today, if you look at the convergence of its short-term averages 5 and 20, this is a good sign that there could be momentum in the offing, and that's why we are recommending building fresh long positions when it comes to Nifty Bank as well. From a trading perspective, we may see a swing towards 56,400, but eventually we are of the opinion that this rally would extend towards 57,000. The contraction has been really good. One can keep a stop loss at 55,730 on a closing basis and build aggressive long positions even in Bank Nifty.
Got it. Okay. All right. Aggressive long positions on the Nifty Bank. That's going to be important because that's been a bit of an underperformer. Sachi, but what about individual stocks?
Good morning, Nigel. ICICI Bank, I think, it has been, lacking on momentum. But if you look at the overall structure, the stock has defined a very strong range. On the higher side, 1480 acted as a resistance. But on the lower side, it has managed to, develop a support somewhere close to around 1430. Now, even here, we have seen a positive crossover on its 5 and 20 exponential moving average, which is placed somewhere close to around 1430 level itself. And even here, the RSI on the daily scale has shifted or, displayed a breakout above that 50 level, which is again a significant sign of trend improvement. So we are of the opinion that ICICI Bank could extend its rally towards 1480 eventually. From a trading perspective, the target is placed at 1466. We are recommending building long positions with a stop loss at 1436 on the lower side. The other stock on our radar, which we have also recommended to our clients, is Grasim Limited. Now, if you look at the overall development since August 2024, the stock was finding itself difficult to surpass that 2900 mark. In fact, if you look at the overall structure on the weekly and the daily scale, this looks like a classic rounding bottom formation on the larger degree. And even if you look at the short-term price action, we have seen a breakout from a bullish pennant formation on its 60-minute scale. So overall, the development has been really good. We are expecting that the momentum can extend towards 2970. From a trading perspective, one can keep a stop loss at 2830. But from a position perspective, we may see this particular rally getting extended towards 3060. And hence, we are recommending building long positions in Grasim. Stop loss would be at 2830. First target 2970. Second target would be 3060.
Okay, Sacchitanand, thank you so much for joining us, giving us the view on the market as well as the 2 stocks, ICICI Bank as well as Grasim. Thanks so much for joining us. But let's focus now to our special segment where